Welcome back to Conversation to Close. This is Sean, and today I want to go over amortization versus balloon. This will be a short video, but I want to make sure that you have a pen and a piece of paper or your calculator in front of you, because visualizing this will make a lot more sense than just hearing me talk about it. So I'm going to wait a second. Go ahead and get yourself something that you need, whether it's, again, a calculator, a piece of paper, whatever, and let's do some math. So first and foremost, the basics of amortization versus a balloon, the ideas are very different. Balloon does not mean term. Those words are not synonymous. What you're looking for is amortization and term. Those are synonymous. They basically mean the same thing. All it means is how long the loan is stretched out for. So if you're doing a seller finance situation, then whatever the seller finance portion, which is the purchase price minus the down payment, whatever's left over, that's going to be your seller finance portion. That is going to be amortized over a 30-year term. That means we're taking that balance, cutting it up into equal payments stretched out over 30 years. What a lot of people do when they make a mistake is they think that something like a 10-year or a 7-year balloon shortens that amortization, and it does not. They're both done at the same time. So let's do an example. Let's say your subject property is $100,000. That's the purchase price. You're going to give them your max down payment, which is 10% down. That's $10,000. That leaves the seller financing amount at $90,000. So if we were to take that amount, that $90,000, and stretch it out over the length of the loan, which is 30 years, that's the term, okay, then what you would get in that situation is a monthly payment of $250 at 0% interest. If we were to cut the amortization or the term in half, let's say to 15 years, then that would double the payment because you're shortening the amount of time you have to pay it back. So here's where the calculator comes in. With a monthly payment stretched out over a 30-year amortization, which is typical, $90,000, that payment at 0% interest comes out to $250 a month. So what we want to do, what you want to punch into your calculator, is 250 times 12. That's $3,000 a year. So the seller is going to be receiving $250 every single month as their monthly payment. And in the course of a year, they will have been paid $3,000. Now, let's say we put this on a 10-year balloon. The payment and the amortization stays the same. All the balloon means is that whatever the balance is left over at the 10-year mark, we're giving them that in one shot. So in this scenario, over a 10-year balloon, still amortized over 30 years with a $250 a month payment, the seller will have received $30,000 of the $90,000 that we were seller financing. So at the end of the balloon, we would give them, or the buyer would give them, a final payment of the balance, which is $60,000. That's how a balloon works. So when you're using the deal machine calculator, don't ever change the amortization to what the balloon is. There is no place to put in the balloon on the calculator. That is something you're going to have to do separately. But all you're essentially doing is taking the total purchase price, subtract the down payment, which was $10,000. That leaves $90,000 left to be seller financed with a $250 a month payment over 12 months. That equals $3,000. With a 10-year balloon, that means that over those 10 years, the seller will have received $30,000. And at the end of the balloon, when it becomes due, that's when we would give them the remaining balance, which would be $60,000. So that's the difference between a balloon and an amortization. Don't get confused the different terminology. If someone says term, they're talking amortization. If they're talking about balloon, they're talking about how many years do I have to keep receiving payments until I'm paid off in full. I hope that answered your question about balloons versus amortization and term. If you have any other questions, drop me a comment, comment, and subscribe. Have a great day, and I'll talk to you soon.